Okay. A few latecomers, but we'll start now, I think. Hello, everyone. My name's Damien McAlonan. I'm the Group Commercial Director for eConsultancy. For those that don't know eConsultancy, we are the digital marketing and e-commerce experts, and we transform business by giving our insights, our advice, our consultancy, and also our training. But I'm not here for that. I'm here to talk about our next presenter. It's Andy Mulcahy, who is the Strategy and Marketing Director at IMRG. Now, Andy has worked at the heart of the online retail industry since 2010. He's developed a strong knowledge in multiple areas, researching and producing reports on trends and developments affecting the sector. However, it says in his bio that Andy is a frequent conference speaker and commentator. And I think that's certainly true if you have a quick look at what Andy's done at eCommerce Expo. He's presented on the following topics. What role will AI have in retail? The return system is broken and how to fix it. What do cross-border shoppers want? And now we're about to hear what's wrong with e-commerce. I'm looking forward to returning later and asking Andy a few questions. I will also be opening questions to the floor. But for now, can you put your hands together and welcome the hardest working man at eCommerce Expo, Andy.
I've always wanted to do that. I haven't. I'm joking. What's my name, Damien? Yeah. We had this great conversation before I went on. He said, how do you pronounce your name? And it's not that. We went over it quite a lot. There's lots of different ways to say it, but that is not that. Yes, hello, everybody. So I'm from IMRG. If you don't know IMRG, we're a trade body for online retail in the UK. So we benchmark lots and lots of information from lots of retailers so we can show you how the market's doing and all sorts of other stuff. We've got this cheery title here, What's Wrong with E-commerce? I guess you come to the eCommerce Expo because you want to say there's nothing wrong with e-commerce, right? It's fantastic. You should buy our solution because it's going to empower your universe. And I'm sure that's true, and I'm sure your solutions are amazing. I'm not casting aspersions on them here. But it's in a bit of a mess, is e-commerce. Just like everything is in a bit of a mess, right? It's just a part of everything being a little bit difficult at the moment. But I'm not up here just to moan. I'm going to show you quantifiably what's wrong and where the actual sort of problems are. But then I'm going to show you a slightly more positive bit, which is looking ahead to where growth might be actually sort of reasonable. So there's lots of lines on graphs and things. You'll get the hang of it, I think. That's a nice little, so the marketing team did that. See, it's sort of, the balls move around and stuff. The really observant of you would have noticed that the dot came off the IMRG as well and has also joined the party. I'm told that people love that. Show of hands, please, who loves that? It's not conclusive evidence for me, that one. I'm going to feed that back. First of all, we're just going to look at the market. And some of this I think you probably know, but I'm just going to go over it so we're all on the same page anyway. Feel free to take pictures and stuff as we're going, by the way. I'll try and give you enough time to do it. Some of the slides have animations, so just wait for the animations to feed in before you take the picture. This is looking at quite a long view of online sales, right? So what we track at IMRG is online sales from retailers. So we track them from online-only retailers, but also multi-channel ones. It's just that we only track their online sales. So people like M&S and ASOS and, sorry, that's a stupid example. M&S and John Lewis, etc., River Island, all those people are in here, but we just track their online sales. So what you're looking at here is pandemic, right? So pandemic, loads of really strong growth with lockdowns, and then you've got really tough comparison the next year when it's not really able to grow. And then this is the point, really, where we sort of got down away from those big wobbles, and we might have hoped to get above positive there, but it didn't really happen like that. So what happened around that time is that we got used to this term cost of living crisis, And it's just kind of kept things down, really, and I'm going to show you why it's kept things down. This is zooming in a little bit on the market. So now what we have is 30 months of online sales here. And it goes back 30 months because that dot there was the last time that we had positive growth, and then it went down. We've had positive growth every now and then for a week, but for a month we've not managed it until August just gone, when we got 1% up. So we did get a return to some positive growth, which is smashing news. Also because the weather has been so terrible, August it really rained. At a time when you're trying to sell your summer ranges and stuff. So it's pretty good in that respect. But the first 2 weeks of September, I'm afraid, weren't very good. So the first week was -8, for example. And we had 30 degrees in that week. So that's kind of where things are. But at least we've got a little bit of positive growth to work with. Now, these are the things that have sort of happened that we've got used to, I think, is these incredible wobbles in what's going on. So what you're looking at here is month-on-month growth. What that means is, did the amount of money spent online in August go up or down relative to July? And what happens normally across the course of a year is, if you don't have a pandemic, these lines are nice and tight, right? So if you look at what happens between sort of July, August, September, October, the lines follow each other year after year. So you're seeing 4 years of data there, right? So it just follows the sort of seasonal patterns of stuff, right? Some months just people spend more money on retail in certain months. So you can imagine over the summer, when people are on holiday and stuff, it kind of goes down a little bit. And then as you get towards the back end of the year, proximity to Christmas, it just absolutely flies up. But look at these massive wobbles that we have here, right? So this is 2020 and this is 2021. Other way around, sorry. So just fantastic wobbles, right? You just don't see stuff like that. So just loads of volume went online, and then loads of volume sort of fell away from online. So it's very confusing, but this is what we've got used to. It's just, you wouldn't, if we went back like pre-2020 and we saw a gap like that, we would have gone, wow, look at that, that's unbelievable, look at the size of that thing. But now we've just got used to how crazy it is. This is the average basket value. So what you're looking at here is January through to December, 3 years of data, 2021, which is your blue line, 2022 and 2023 is grey, which goes up to back end of August. So what you sort of notice here is that the basket value used to be lower, right? So it's sort of hovering around 100 to 110 or so, but then it starts to go up as inflation has kicked in and all the other stuff that's happened. It's gone up and then it's stayed up, right? So look at the gaps here between 2021 and 2022, 23. So now it's more like 120, 130 pounds that people are spending. That's not per item, that's per basket, right? So when someone gets to the checkout and they press buy now or whatever, that is the payment that they, the amount that they spend. So it's just really, really shot up, and it's not come back down again. So that, while it's kind of good news, they're spending more money with you, it just means they're not doing it as frequently. So this is the conversion rate. The reverse has happened, right? So the colors are the same there. You've got 3 years of data. So our blue line is conversion. So of all the traffic that goes to e-commerce websites, how much of it, what percentage of it actually buys something is fantastically low. It was sort of 3.5% to 4%. It's now more like 3 kind of thing. So it's been a very, very big drop. It's a drop of like 20 to 25%. So it's very, very significant. Much, much less people actually completing a purchase. There seems to be quite a behavioural trend where people are shopping around a bit more. They're going to more websites, but they're just not buying. So they're a bit more keen on finding out the best deal and stuff. It's pretty obvious. And this is specifically what the problem is. This is a good one to take a little snap if you want. So this is showing you 4 stages that we look at, which we call the customer funnel. And what the customer funnel is of all the traffic that goes to your website, what percentage view a product page? What percentage add something to their basket? What percentage make it to the checkout? And what percentage complete the purchase at the checkout, right? So we get these figures from the retailers in our panel. So a couple of them haven't really changed. So if you look at that, I don't know, grey line possibly, blue, I don't know. Proceed to checkout is very, very similar, right? There's not really anything going on there. This is 3 years of data split out by quarter, by the way. Viewer product page is the green one. Again, there's not too much that goes on there. It sort of fluctuates from about 55 to 57%, doesn't really change much. The pink one is completing at the checkout, and that has wobbled a little bit from time to time. But this yellow one, or gold, is our problem area. So this is adding things to the basket. It's quite difficult to make out, really. But it actually used to be sort of 18% or so, and it's come all the way down to sort of 13%. So it's just a massive drop in people adding things to their basket. That is your primary problem. So if you could solve that problem, you will be winning. Incidentally, if I was to split out these figures and just look at the individual retailers who make them up, it isn't a universal thing, right? So what I'm showing you here is an average. But some retailers have got higher than that, right? And some have got lower. So some are good at this stuff, certain areas of conversion, and some are not very good at it. But a key thing for you to understand, you might be having problems in your business. You might go in on a Monday morning and think, bloody hell, look at these figures. But there are some retailers who are still doing well. Right? There is still positive growth that some retailers are getting, big retailers as well. In every category, someone is doing well. So it is possible to achieve stuff. Here's a further problem. This is the customer average order frequency. So this is new customers is your yellow bar. So how many times do they purchase from you in a year? New customer average is 1.32. For existing customers, it was 2.77. So that's 2021. Go forward a year into 2022 when the cost of living crisis has become big news. And they've all dropped, right? So not only are they converting less, they're also not buying as frequently from e-commerce sites, right? So it's problematic. This is one of those that I have to fill in the data a little bit before you take a picture. This is looking at the cost of acquisition by these channels, and what we did was we looked at the customers, and then we simply divided that by the amount of revenue that is spent through those channels to give the cost of acquisition, right? So paid search, paid social display, and affiliates. So paid search would be a Google ad or Bing, if anyone does that. Paid social is Facebook and what's another? Instagram. There you go. I'm good at this stuff, aren't I? Display is a display ad that chases around the internet, and an affiliate is something like a voucher code type site. And what's happened? That's 2022. Those numbers. This is 2021. So that is the percentage change, right? They've all gone up. So because the conversion is weaker, it just means that those numbers have flown up, right? So you're spending all that money through those channels, they're not converting as much, hence it costs more. So that's those problems. But really, at the moment, the big problem we've had this year is the weather. The weather has been a real brute this year. I did that animation, it's good, isn't it? That sort of. So what's happened with the weather is that we had a very dry spring, really warm, winter, it's very warm, really wet, warm, dry, really wet summer. July, August was a total washout, if you remember. And it's very difficult for categories such as clothing when the weather is not doing what you'd want it to do. It's very difficult to sell things when people just have it in their mind. You know, if it's raining, they think, I need a rain jacket. If it's warm, they think, I need some shorts. But of course, it's difficult to buy all that stuff in and be ready to have all that merchandise available all the time, just to whatever the hell the British weather is going to throw at us this week. So, where is the growth potential though, right? So it's all quite miserable. But like I say, some retailers are doing a bit better than others. At the start of the year, we did a forecast where we said we think this is what's going to happen with online sales this year. So this was 2022. So that's what happened across the course of the year, and then we do a three-pronged forecast. So expected is your yellow line. The green line is if things are a bit better than expected, and the red line is if things go a little bit worse than expected. So if it comes in following that yellow line perfectly, then what would happen is we'd get a decline of about 3% online. So yes, it's a decline, but it's not a spectacular one. And you know, things are sort of pushing up towards positive growth a little bit more, unless we end up with that red line. This is what's happened so far, right? So we did forecast for a lot of, there's one more animation, by the way, before you take the picture. We did one for a lot of the categories as well, right? So the forecast for the total market would be a decline of 3%, clothing flat, electrical, health and beauty, and home and garden 4 or 5% down, and gifts to decline a bit stronger than that. But year to date, so this is January to August this year versus January to August last year, year-on-year growth for that period, and it's not bad, actually, overall. It's pretty good. There's 4 months still to play for, including the big one, Black Friday, November. But you can see the impact that the weather has had on clothing, right? So it's just had a shocker. It's nearly down 6%. It's very, very, very difficult to get any positive growth in clothing this year. Electrical's doing a bit better because small appliances are selling really well. So you might read into that energy-saving type things, and also just cheaper stuff. And what's happening in home and garden and electrical is that people aren't buying furniture and TVs and those sort of big expensive stuff. They're not doing it as frequently as they were, right? So the order volumes are down, but the revenue is up because everything's so bloody expensive. So it's kind of good in a way if you don't have to sell quite as much to get a load of money. So that's kind of what's happening in those. It's sort of a weird sort of good news story for those categories. Health and beauty is having a blinder. If you're in health and beauty, you're in the right category. So you'll see now that we're back to this chart here, but we've added that blue line in because it's showing you the actual performance so far this year. And it's pretty good, actually. So yes, we've had some categories that have really struggled, but a few others actually done a bit better than expected. So what it means is we've sort of hovered between good and expected for most of the year, and at times we've actually gone ahead of expected. And as you see, if we keep doing that, we're going to be above that 0% baseline by the back end of the year. So it's not all bad. It's just that some categories are suffering a little bit more than others. But you know, I think you can read into that. Close to the green line is good. So when you take that into your Monday morning meeting and you show this, and they say, "But what does this mean? What are you showing me here?" You just say, "Green is good." Okay, that's your insight. This is really confusing, this slide. Okay, so I'll explain it. I hope this makes sense to you. So do you remember I was talking about year-to-date growth, right? So year-to-date is you take this period this year, so January to August so far, and you compare it to January, August last year. Is it up or down year on year? What this graph is showing you is the blue line is the forecast, right? So this is the blue line showing you the forecast that we put out, so about 3% decline. And the orange one is showing you, month after month, what the year-to-date figure was at that point. Okay? Does that make sense? Have you got that? So here, for example, with 2 months of data, we were comparing January and February this year against January and February last year, and the decline then was about 4%, right? So we actually didn't have a very good start to the year, but actually since then, things have got a little bit better. We had a good March, and we had a good April. So what you're looking for with these lines is which direction are they heading in, right? So that orange line is on an upward trajectory for the overall market. You think that probably that's going to come in a little bit higher, right? So if you're being honest, if you follow that line kind of up a bit, it feels like maybe 1.5% down or so might be achievable, which would be good against our forecast. Negative, yes, but good against the forecast. This is clothing. This is quite a long view. Goes back those 30 months I was talking about. So that's when we had positive growth. Look at that, 50% up back in pandemic times. Those days are gone, aren't they? So that red line is showing you where the year starts. So what you're kind of interested in here is where are those lines going? Are they kind of in the right place? And for clothing, it's really not. It's really not in the right place. So it's very negative. It's been negative all year. And then this is that same thing, right, that I showed you. This is the year-to-date progress for them. So the same thing applies, right? That's January to February, year-to-date, year-on-year. So that's what that's showing you there, all the way through to August. So that line, bearing in mind, as you add more months in, it becomes more difficult to really push it up or push it down, right? Because you've already got quite a big sample. So where it is kind of where it is, really. And it's looking like it's not going to really do terribly well. So it feels like maybe it's kind of pushing up a little bit, but it could come in at, -5. If it goes quite well, maybe -4 for clothing might be achievable. So it's pretty bad, obviously. One thing though, because the demand in fashion has been really weak, people are kind of overstocked, which means that as you get into the discount period, it might be that people slash the hell out of that stuff. So you might see some movement there. This is beers, wines and spirits. It's a bit of a basket case, if we're being honest. Beers, wines and spirits, very, very susceptible to weather and things like events, right? So if there's like a World Cup or something, everyone wants to get drunk. So that kind of thing actually tends to push it up. If it's barbecue weather, it does well. So real basket case, had a couple of good months and then had a few bad ones. But that's how it's looking, right? So it is going up, but it's pretty negative, right? So it's had a bit of a tough year, and it feels like it might come in at about -8 or something like that. So not fantastic, really, for beers, wines, spirits. This is electricals. Electricals done a lot better than we might have thought, and it just had an absolutely storming March. Really, it did really, really well in March. And the rest of the time's been, maybe not quite as good, but it's just built a really good base. So electricals is because of that March figure, right? It did really, really well. Look at that massive spike there. Well ahead of the forecast, by the way. Probably coming down a little bit, but might end up somewhere about -2 or something like that. So better than we maybe thought. This is gifts, poor old gifts. If you're a gifting retailer. It's really struggled. It's struggled for a very long time. The occasional sort of boom that it gets, negative, and it's quite strongly negative as well, sort of 10%, even more at times. But it's not consistent across all types of gifting retailers. So if you're a multi-category retailer that's got gifts as one of your categories, so you might sell home and you sell gifts, for example. So think of your big department stores and stuff. They're doing a lot better with gifts than the specialists. So if you just sell gifts, then they seem to be struggling a little bit. And that's the progress. And this is, I feel sorry for gifts, really, I do, because every now and then it has something positive kind of happens, but it's just so far away that it just can't get there. You're sort of trying to throw a javelin across the sea, is what you're doing with this. So it's probably like ticking up a little bit, but it's going to finish, maybe like -10 or something like that, which is not great, really. And I know what you're thinking. Christmas is coming, Black Friday. People are going to buy loads of gifts, right? But it's a year-on-year measure, and it's just tough. It's not really going to do well. Health and beauty, though, is our star performer. This is one that kicked on from Mother's Day. They said they had a little bit of a ropey start to the year, but then Mother's Day was absolutely fantastic. And since then, it's really, really sort of kicked on. So good place to be. Makeup is doing really well as a subcategory of beauty. Ditto, what am I going to say? Hair care, I think. But fragrance, not so much. But makeup's doing well. Makeup is a very, very big proportion of it. So look at that. That's a nice place to be, isn't it? Crossed over the forecast and right up there. And it feels like probably positive growth, I think, for beauty retailers, which would be amazing compared to a lot of the other types of retailer. And then this one is home and garden. So that's a nice upward swing for home and garden. Remember what I said about things being a bit expensive there? So not necessarily selling loads more of them, but they're just more expensive. A chair and a sofa and a bed. It's really bloody expensive now. That is garden and home, right? So they're split out there. So we have home and garden, and we have home, and we have garden, right? So they're kind of split out. So the green line there is garden, and it's because of the weather. I know I keep coming back to it, but it really is very significant in retail. Look at the impact that it has. You can easily map across onto that. Was it raining when it shouldn't have been raining? Was it hot when it shouldn't have been hot? Real disaster. So incidentally, in the start of September, when you might think, oh, it's 30 degrees, maybe that's good gardening weather for people. It's not, because you can't get a bloody shovel in the ground, right? So it was a really, really big impact to start of September on garden retailers. People just don't do gardening when you can't dig. That is an upward trajectory, though, isn't it? It's very good. So that's being driven for home and garden absolutely by furniture. Everything else is actually a little bit negative. Furniture is up. So that's what's kind of pushing that in the right direction. I think that's it for my little presentation. Thank you very much.
Go over here. Well, thank you very much, Andy, for that very comprehensive presentation. What's going on with gifting? Have people stopped giving?
In short, yes. I mean, it is just one of those things, isn't it? You do. It's because you have to buy something for somebody, right? And you can easily not. I think is kind of the thing. Or you're buying a slightly cheaper thing. Also, the experience type stuff has really had a good kick in. So if you think about people who would buy, a gift for someone, which is like, oh, you're going to go and stay in a village, a little cottage in the Cotswolds or something like that for the weekend, or you're going to jump out of an aeroplane or something like that, which incidentally I'm doing in 2 weeks' time. I'm jumping out of an aeroplane in 2 weeks' time.
Was it a gift?
Yeah, someone who doesn't like me. No, we're doing it for charity. I really don't want to do it, but here we are.
Okay. We are going to be turning the mics over to you guys, but I'm going to be a little bit selfish here and ask, what was the most surprising finding of this year for you?
They're only surprising until you rationalise it, really. I think beauty is one that's done really well. And when you speak to beauty retailers about it, they say that it's because it's a bit recession-proof. So it's quite a low-cost purchase. So people can kind of keep doing it. It makes you sort of look good and feel good. And you might cut back on some other stuff. So it actually does well when times are difficult.
Yeah, I also saw that health and beauty did exceptionally well during the pandemic. Maybe they just kept that up because people didn't feel like they needed to go back to the shops.
Yes, and again, it's not all equal. So the multi-channel retailers are the ones that have tended to do better. And I think the primary reason for that is during the pandemic, people who would go to a high street retailer to usually do their shopping just went to the online equivalent of that. Right? So they didn't go online and search for the product or whatever. They just went to that. I go to Boots, now I go to boots.com. Other beauty retailers are, of course, available. But what that enabled them to do is build like a hell of a, as customer acquisition, building out quite a big database. And I just think they've been able to sweat that a little bit better. So the multi-channel one's definitely better than online only.
Great. And because you've been doing this for some time now, can you see any sort of long-term trends coming through? I know we saw a lot of this going on, but could you pick out any long-term trends?
One thing that we have definitely seen, and I'm sure you've seen it in your figures as well, is the change in how people are going to websites. So we traditionally think that people will go to a homepage, right? So you set out your homepage as in, this is our front window, this is where people are coming to. But actually more traffic is coming through product pages, which really changes the type of journey that someone would have, right? So if they go to your homepage, you've got all sorts of options that they can look at. Oh, I might have a little browse in here. Oh, okay, you've got this category, that category. When you land on a product page, you look at that product, do I want it or not want it? And then perhaps bounce off, right, if you don't want it. So it just means that the sort of customer journey that you expect your customer maybe to go on is going through a bit of a shift. So what can you do about it? Things like those kind of customers who viewed this also were interested in that type thing. So you're trying to, if this isn't the thing you want, we might have paid for you to click on that bloody ad. So we don't want you to just go again. So if it's not exactly what you want, trying to get a bit of smart merchandising, I think is the thing really.
Yeah, I was taking a quick look here at EY's Future Consumer Index, and it showed 3 core demands: make life easier, make it better, and make it more fulfilling. I was just wondering, is there a way that retailers can actually focus on becoming more customer-centric?
They didn't say make it cheaper.
No.
Because the thing is, we we do like cheap stuff. We like a discount and things. So I think it tends, people sort of like to think that they shop really sort of, ethically and all that sort of thing. I don't think they really do. When push comes to shove, you go for the cheaper thing, don't you? But of course, the customer experience thing is ultimately very important, right? Because there are some very, very large retailers. You know their names. You can just go and shop with them, obviously. But actually, people buy from other retailers too, right? So every different business has its own sort of nuances, and you might go to a retailer because you like the way that they do it. And it can be anything. It could be, they just deliver really fast, or they've got really good customer service, or I like the information. They're very good at helping you to understand what you're doing, or something like that. So it's different for everybody. You have to find out what's our strengths, and just really get focus on those strengths.
And is there any kind of figures that sort of relate to loyalty? Are people having more brand loyalty out of the pandemic, in the pandemic?
Yeah, it's interesting actually. So the conversion dropping, another reading that you could put onto that is maybe people are getting a little bit less kind of loyal, and maybe they're shopping around a little bit. So I think the shopping around thing is definitely kind of a factor. You will hear people moaning, certainly. They say, our customers are definitely less loyal than they used to be. But I don't know, really. I think, there is just a hell of a lot of choice, isn't there? There's always new people coming into the market with some clever marketing message that they've got, why they're so ethical or whatever, and so I think there's just a lot more choice, and it's not going to go down. The choice isn't going to plummet, really.
Excellent. Has anybody got a question on the floor? Yes, we've got Mike and Mike over here.
Hiya. My question is, if the e-commerce sort of market tends to recover within the next year, let's say, and we actually do start to see some growth, are you expecting the cost per acquisition, particularly in paid search, to be sort of less inflated and perhaps even fall, or the exact opposite?
Yeah, it's related to conversion. So the reason that it's shot up like quite a lot is because people aren't converting as much. So you're still paying to get the traffic on your site, but that's why the cost has got up. So I don't think it's going to just rocket up again, because the conversion is pretty set in its pattern now. It's dropped, but now it's where it is. It's not dropping further necessarily. So you have this mortgage bomb and stuff, don't you? So there are more kind of economic shocks to come. Don't get me wrong, but it has dropped to what it feels like is a bit of a floor. So even if the e-commerce revenue gets into positive, unless that conversion moves up or down, then you probably wouldn't see big shifts like that. I don't think. And what's a related point on that is, what is a good conversion rate now, right? So if it was sort of 3.5 to 4, and now it's 3, is it 3 now? You see what I mean? Is it gonna trickle back up to 4? Is that the reality now, that it's gone down and it's kind of staying down? It looks like the cost of the spend has gone up, right? So, and that's not going to come down again. You're not going to go to a pub and, we've put the price of a pint down to a £5 actually. That's not likely. Things have gone up and they're staying up. So it feels like some of those metrics have changed, and you need to sort of base the forecasting and the proposition and the structure and everything that you do probably around that new reality.
We had another question over here. Just on the basis of that, just very quickly, have you seen any changes in the kind of marketing strategies that people have adopted because of that exact scenario?
Some did, yeah. There was a little bit of a push towards, in the email campaigns, to try and get a bit more of the sort of brand story through, if you see what I mean. So instead of, if you know the conversion actually isn't going to be that great, the email communication isn't just like, here's a product, buy it. It's by the way, we are a really good thing. Here's our story. Here's how we do this part of it, and that's why you should sort of buy from us. So I think building the sort of the brand equity is something that some are focused on, in the expectation that at some point the economy will recover a bit. Hopefully we'll all feel a little bit better off, and then they should be the ones to benefit from that. Because if you know what it's like, you think to yourself, oh, I need this product, I need a broom. Where'd you get a broom from? And in your mind, you have like, oh, I know which retailer I'll go to get that. So you can go and search for a broom, but a lot of people would have in their mind already, oh, I'll just go to that one. So I think that that's obviously a very nice place to be.
Great. Sorry.
Hello. Fascinating, by the way. I guess there's an old saying about never let a good crisis, I can't remember the end of it.
Get you down.
Go to waste. And I guess from your sense, there's a lot of kind of talk at the moment about profiteering, about tacit collusion that have been happening across retailers, that the actual unit economics of that they've pushed the prices up huge amounts. So yes, is top line revenue down? But actually, are they making huge profits because the unit economics on each individual item are so much higher now that, and actually there's massive profits being made by retailers?
Yeah, I mean, I don't know about, there's huge businesses, aren't there? And then there's sort of everybody else. I think some of the margin stuff has got a little bit better because of some of the macro stuff has settled down. So if you cast your mind back to 2021, there was a real hoo-ha about profiteering from the container companies. So when you put those containers on the ships and move them around, all the stuff in that, it went up to the tune of 10, some of those prices, right? So if you were paying 200 quid or whatever before, it was $2,000 because the demand was so high that they could do that. That stuff has settled down. So it isn't like you're hemorrhaging money in some of those areas anymore. So some of that might play into a bit of that. But I think if you're not trying to meet the customer cost-wise, then I think you're playing a bit of a risky game, really. If you're sort of keeping the price up because your competitor will get wise to that, I think.
I think that tacit collusion that across all retailers are not it's not a competitive field. I mean, they're not illegally profiteering, but they are. You're looking at all your competitors and their prices are going up, and you're just matching your prices going up and up and up. So we're not in a competitive marketplace at the moment. We are seeing everybody just slowly increasing their prices, and the customer has to pay because where's the customer going to go?
Well, where is the customer going to go? Yeah, I mean, if you do that, I just feel like you'll all go, oh yeah, and then someone go, that's what it kind of feels like to me, and it'll be, screw you lot, I'm gonna join them. Competitors don't like playing with each other. They're not going to play fair. I don't think so.
And is that a domestic thing or an international thing? Those kind of creeping prices.
I mean, it really depends on the type of business. I mean, you have this sort of pricing strategy, don't you? You're very laser focused on the sort of margin. I think you have an idea of what someone's willing to spend on something, but it's risky, I think, to mess about because you can't really act like that these days because of the real-time social media type thing. It's like if you sort of send an email to a customer and they don't like it, that's straight on Facebook. So everybody, look what they said to me, highlight or whatever, and you can't. And people can. They take snapshots of sites. They do this around Black Friday, to catch people out. They say, oh, hang on a minute, you said that this price has dropped but look, I took a picture of your site a few days ago, and look at the difference. So people, there are actually people that do things like that, as incredible as it may seem. So you've got to keep an eye on that, I think.
Sure. We can't control the weather, but
No.
do you see any kind of economic strategies being put in place to help retailers?
No, frankly.
Do you think there should be?
The thing is, it's so changeable, isn't it? And as much as you've got two things here, right? You've got the weather and you've got the climate, right? And one of them is short term, one of them is long term. So the trend on the longer term is for more extreme weather. So you might get more droughts, you might get more floods and stuff. But it's not like we've not had that before. And it's so unpredictable. I think the challenge is always going to be, particularly with a someone who's seasonal, like a clothing retailer. How do you sort of plan for that? Because you buy stuff months and months and months in advance, in the expectation that it's going to be September, start getting a bit colder. Oh, it's 30 degrees, but it won't do that next year. Because it always plays up the weather. You cannot rely on the bloody thing in this country. So it's very difficult, I think, to strategize for it. Difficult situation, definitely.
We've got another question here.
Hi, yeah. I guess as consumers overall become more inclined towards the environment, the things like the circular economy, especially with Gen Y and Z, moving to platforms like Depop and Vinted and things, what does that have for the future of e-commerce, right? Because that's on the premise of actually we're not buying new goods and making new goods, we're actually recycling and using things that were been produced in the past. So what do you see as a prediction in the future that will have on our revenue as retailers?
So I think that's a wonderful world. I do, but it's taken a long time to get going. Now I'm not sure with Depop and Vinted, etc. They put out some figures saying, one of them, I can't remember which one, said they've got 8 million active users or something. That's a hell of a lot, isn't it? And if you speak to somebody like Collect Plus, they'll tell you that they're seeing that volume start to become actually reasonably significant. But you've been able to do this for years and years and years, and we haven't really. We haven't sort of changed our behaviour. What you'll find with fashion retailers, they have tried to meet this, alleged demand, because you'll see that they have like a pre-loved category, right? Or they'll do repairs. So they'll say, send in your old top and we'll repair it for you. But the demand for it, they put it on there, it looks good, no one uses it. Now, if Vinted and Depop start to, make that culture where people do think a bit like that, then all that would happen is that the retailers would start to, because everyone's driven by demand, right? So if that's what your customers are doing, if they're coming on your site and searching for that, and you're seeing those searches increase, then okay, so let's meet that demand. So I think that everybody, if that really does start to happen, I think you'll see them shift, and I think it'll be a really interesting. I mean, that could be a really interesting way that retail evolves. It feels like it probably needs to do something like that. It'd be amazing if we are starting to see that transition, but I don't know. I am, because we've been saying it for years and years and years, and I do think that people they talk a good game about their sort of sustainability footprint, and then you'll find them just chucking plastic in the bin, and and driving the kids to school and stuff. It's not quite consistent, I think. But if it is happening, great.
We have time for one more question. Yep. It's over here.
Do you dare make any forecasts for 2024 yet?
We haven't done. We tend to get to the end of the year before we do that. But if the course that we're plotted now remains true, so let's say, if you remember the red, green, and yellow line, if we do end up closer to the red line, the green line than the yellow line, and the figure for the year comes in better than the forecast, then I think you'd probably have to say that some level of positive growth in 2024 would probably be where we'd look. Not 10%, by the way, maybe 1% or 2%, but yes, it would feel like at least we're back.
just have one more for myself, if that's all right, Andy. If retailers were to take action or respond to only one of the findings of this year, what would it be for you?
I think that you can't get away from it. The conversion is the problem. The problem is conversion. But like I say, there are retailers in every category who are doing well. If you take all the retailers who make up that conversion rate and spread them all out, there's one retailer that gets a 17% conversion rate in our figures. There's several that get 8% plus. So you can do it. It's just it's kind of difficult. But all these solutions, all these people you've been talking to today, they can help you do that sort of stuff. You just got to find the right approach. You can definitely improve metrics if you get the right approach to it. So it's not all doom and gloom. I'm conscious there. I have this sort of prophet of doom. I'm a pretty miserable bloke anyway. And then you give me some sort of negative figures, and I'm over the moon. But there are positives.
Yeah. Well, I think you've been very optimistic today. I'd like to put our hands together and thank Andy. Great. Thank you very much indeed.
Thank you.
And thank you all for coming.